Hello and welcome. This is Roy. In line with my recently adopted habit of telling you upfront which opportunities I think are the best, I would mention the New Zealand dollar US dollar for selling short, the British pound US dollar on a break of 150-150. By and large, the stock markets that I cover in this video, I think are ready or must be really near a situation where they would become a great short sale. And I have in mind the NIKKEI, the DAX, the CAC 40 of France, the Chinese Securities Index, the STR of Singapore, and maybe even the FTSE. And you notice that I didn't mention any of the US markets. While I think that they will drop, I think that the best thing to do when you want to sell short is to look for the weakest markets rather than the strongest. And from what I see, the US markets remain the strongest of all the markets that we survey throughout the world. So here's the long list of charts that I'll be covering. In this video, I've got the dollar index, the Euro US dollar, Australian dollar US dollar, New Zealand dollar US dollar, British pound US dollar, British pound Singapore dollar, British pound Canadian dollar, British pound Japanese yen, Euro Japanese yen, gold, silver, platinum, TYX, TNX, USD bond. That's the September contract. And then I have the Dow, the S&P 500, the S&P 100, the Nasdaq 100, the CAC 40 of France, the FTSE of the UK, the DAX of Germany, the NIKKEI of Japan, the Chinese Securities Index, and I'll terminate the video with a look at Singapore's STI. Okay, that's the dollar index, and that's the weekly scale. And the market has not given us this week any resolution as to the question that we posed recently, whether we're looking at a move that will take it down towards 1850. And I'm looking at dollar index on a weekly scale. Okay, going back here to October 2011, bottom scale is 75, top scale is 85. Basically, what I think, basically what I think is the main question here: are we going down straight towards 80.50? At which point I do expect it to hold ground, and then we bounce back to a sustained rally, or we go straight up. We go straight up Monday, Tuesday. We turn up and we start going up, and we shoot above the level here into a 3 of 3, meaning 1-2 or 1-2. 1-2 and then up in the third wave. I don't have an answer for that. Some markets, some forex pairs that I cover in this video look really interesting. They have almost a particular, a specific, if you like, a forex specific wave count that is not really captured by the umbrella, if you like, the dollar index umbrella that this index is. So right now, what do we see here? We see here a potential of a 1-2. That's on the daily scale, either a 1-2 or a 1-2, and that for now is taken as 1 with a question mark. The question mark will drop, and this will become part of the correction second wave if we get a break straight down towards 80.50. And when you look at the 60 minutes, there's really nothing to cheer about. Nothing to cheer about. This is still very undecisive. You see, ABC, yes, good work, but not really brilliant. The proportions don't look right. And where is it going? It is still sagging, still needing the support here. So I'm not very enthusiastic short term about taking a position in this market. I would say that if you get a daily close under this line, it's almost certainly going to continue quite a lot lower. It's quite possible even that my assessment that the B ended here is wrong, and that the B probably ended here or might end somewhere here, and then you go for a big C down. Okay, so this is still a situation that, in my opinion, is a wait and see. We don't really have odds stacked very favorably one way or another. This is the Euro US dollar weekly scale. Big pattern has not changed. That's going back to 2006, and my bottom scale is 115, top is 160, and no change in a big picture here. This is still okay as a 1-2, potential 1, that potential 2. We need to see that massive break under the floor here that you can see to take us down in the third wave. But this market is still dragging its feet. Now this is the daily that is giving you 1, 2, 1, and what is that? In my opinion, this is unresolved. Unresolved as of now, and a break under the orange line, which comes at 130, yes, will be quite interesting and could open the way for a break all the way down to the floor here. But I think that the firm close above my orange line here most likely will send it up with a potential to test 134. I really don't have a very strong statement to make here concerning this forex pair, simply because the market is not allowing me to. I don't really see very strong signals coming out of this price action, this meandering of the last 7 days or so, 7 trading days. So when there is no clear wave count, I think that the best that I can do is not to try to push one. You know, when there is not a clear situation, you don't want to start dreaming up things. Dreaming up things is good to do at night when you sleep. But when you trade, you want to be as wakeful as you can and as conscious as you can of what you're doing, because not doing so is the road to ruin. So right now, there is nothing that I can say that is backed by, if you like, odds on my side, whether I think of going long or short. Okay, that's the Australian dollar, US dollar weekly scale, and I think this one is still looking like a market that has not finished with the downside. Plenty more downside here. I will not cover the long term. I've covered it already on quite a few occasions. I just wanted to show you that the weekly has gone nowhere here. Do you see? It's now 1, 2, 3 walk, 4 weeks. We are basically in a tight range here, and it's not going anywhere. And it is favoring, as I can see, it is favoring currently with our recent price action. One of the wave counts that are presented as taking all of that as 1, 2, 3 potential fourth wave. That's the daily scale, if I didn't mention. This is still looking like an okay fourth wave. I said all along, a strong rally above my orange line here will set the stage here, in my opinion, for further upside. But so far, nothing. It is just stuck. It is stuck and unable to do anything. Just look at that. Unable to do anything, and somehow I don't really see doing it. I mean, not making. I can't see it making this. Seems to me like something really dramatic has to come up here for this one to jump above 93 and start galloping up. That doesn't look likely to me. For now, all the odds sit with the bears as part of fourth wave correction. Take a look at the New Zealand dollar, US dollar, and I have here a situation that, in my opinion, is attractive. Not without risk. You never have a situation which is without risk, especially in trading. And here, the risk, of course, if you sell short around here, the risk, in my opinion, that you'll get a short towards 82. And this is the maximum risk that I see at this point in time. It's not nothing. It is substantial risk. Is 300 pips, but this is really the top maximum. I think that is more likely to if it rallies at all, it will probably shoot towards 81, and it will not manage to climb above this wall of resistance. This is 200 pips. The potential is very good. The potential is very good because if this is a correction, and by my reading, this is a correction. This is a correction, and the market has been trying very hard to make headway here on the upside with this corrective rally. Has gone nowhere for a long time now, for 4 weeks. This is the main trend. This is the main trend. So what do we have here? Basically two options that we should consider. Either we take all of that as one, and the one could have ended here, believe it or not, right here. Yes, and that will be taken as two. Two might have ended, might extend, might continue, not necessarily going up, but might continue on the time scale. Yes, just chewing up time before it's ready to drop. But this is a good opportunity. The risk is not enormous. The potential is great. The potential is great. When you think that this is just the first leg down, you begin to see what I'm trying to say. It's going to go down by, yes, could be as much as 1,000 pips. Yes, this is not a dream here in terms of the proportions, because if you look 86 to 77, that's 900 pips, 950. If you add this, it's almost 1000 pips. So a third wave is going to be more, at least that much, but more likely to be more than that. So there is a massive drop coming in the New Zealand dollar, US dollar, if I'm right with this wave count. The other option is to take this as one, these two, and then a tiny one here in blue. Do you see? Wait, I'll try to take it out here. If not, I'll let's see. That is one, and that's two in blue, composed of ABC, X, ABC. We're going to see the details now. Now, if you remember, I said it's possible the very, very big one could have ended here. So all of that would be a correction, absolute miserable correction. Miserable correction. Could be composed of many ABCs, like an ABC, that will be an X, that's another ABC, that's another X, yeah, ABC like that, and that's another ABC. And I especially like, as a bear, I especially like the fact that it sagged and just dived in here. That is something that I really like, because it showed that there's no really support for the breakout here. So I will continue to like it, of course, as long as it stays away from the orange line, stays away from trying to establish a base here. Do you see? Just under 80. So this is looking great. Someone could come and say, hey, there is a different wave count here. Yes, sure. There are other possibilities here. It could be that we can take all of that as an A, all of that as a B, and in fact someone will come and say that there are 5 legs from here, with this being 1, 2, that's 3, that's 4, or that's 3, and that's 4, and that's 5. Yes, okay, we're not going to sit and argue about this for hours and hours. The point of the matter here is that this is corrective. Do you see? All of this, what you see here on the screen, that went on for ages, since, yeah, 1 month. Wow. This is really 1 month, the 20th of June. So for 1 month, this one has been going nowhere. Nowhere. What, 200 pips trading range for 1 month. This is nothing dramatic. So I think that this is corrective. The previous rundown was obviously impulsive. Here you are. That's the weekly now. You can see that's the rundown. Impulsive, corrective. We're looking for it to break. Okay, that's the pound US dollar daily scale. And the pound could be ready for a reversal. This is in a way reminiscent of the ambivalent situation we have encountered in the case of the Euro US dollar, the index, the dollar index. And I don't like to push it too far, but I have a level in mind that I think once this level cracks, this one will be ripe to drop. Ripe to drop like fruit from a tree, dropping down to 148. Okay, so big picture that we have here, that's the daily, that's going back to February. Bottom scale 148, top scale here, sorry, 148, that's 161. Okay, so we had this as 1, that's 2. This is still being favored at this point in time as 1, and I think that this is a second wave. We could not be terribly certain that this is the entire second wave, but that is shaping up as a good ABC, in my opinion. It ran up to 50% retracement of the entire drop. It met with the 50 moving average that you see here, and for now, stalled. Stalled, and it looks to me like it's losing momentum. It's losing momentum, and this is one of the best wave counts that I have for it. In fact, the best. And here it is. That is the 60 minutes. So I have 1, 2, 3, 4, 5. That's an A, and I have A, B, C, D, E right here, terminating with a B, and I have a 1, 2, 3, 4, a stretch fifth. Hardly, but that's it, a stretch fifth. And you know what? If I want to really focus on it, I would suggest that it's quite possible that we even have something that looks like a terminal triangle. Let me see if I can get the right perspective so that it will come out nicely here. Yeah, let's try this. Look. How about this? Do you see? A, B, C, D, E. That will be a terminal triangle fifth, which would really increase the odds. If this is correct, would increase the odds that this is really a top. So as I said in the introduction to this video, that's 151.50 is a level you want to watch, and a crack, sharp crack under 151.50. Call it a day. This market wants to go down. This market wants to go down. Look at the momentum of the last 4-hour chart. That's a 4-hour chart. The MACD telling you momentum has gone, disappeared from this market. We have nice divergence here, and that's what I would say. On a break of 151.50, the next target will become the other orange line that I've got here that sits at around 150.25 or so. And when that goes, of course, the next floor is here at 148. Okay, that's the pound Singapore dollar. And also here I maintain the wave count that I've used in the last several weeks. I've got this as 1-2. Okay, I'll just open it a bit. We have this going back to 2011, early 2011 on the scale. 184 bottom, 208 top. That's 1, that's 2 down. In the beginning of the mega third, that's 1, of which, sorry, on the of the big third, we have seen 1, yes, 1, and I think this is a classic ABC. I have really no problem with this one, and I would suggest it can become an excellent selling short situation on the break of the orange line that you see here. Let's go and see the details. Right here, and this is the level. It comes at 192. Do you see? So this is looking to me like a very good opportunity. 1 2 1 2 3 4 5 3 4 5 ended here. That's 1, that's an 8, that's a B, that's a classic ABC. Absolutely classic, nothing terribly special. This is a common ABC. I've seen thousands, tens of thousands of just ABCs like that, and on a break of 192, I think that will become a highly desirable trade. And again, don't sell with two hands going, throwing caution to the wind. You know, the forex market, everything and anything can happen. So please take care. But on a break of 192, we have the next targets at 189.50, and if we are really on that big ride down, 189.50 would look like very expensive for this forex buy. It will be a lot cheaper. So this is another very good opportunity for you to examine. Similar wave count operating here with a pound Canadian dollar, and here I have adopted that's the daily scale going back to March. Bottom scale is 152, top 163, and I've adopted the line here that this is 1 2 3 4 5 A, B, C up. There are quite a few options here, and let's have a look at them. There's one thing that I don't like so much about this one in the recent activity. In terms of when I say I don't like, I mean as a bear. Although I do think that it is going to reverse, it's not going to back the trend if the pound loses ground. This is the 60 minutes. That's an A, that's a B. One option, instead of the B ending here as I suggested, suppose it ended here, and that would become a 1 2 1 2 3 4 5 3 4. That means another short. That means another short above 159. So if you can still just hold on and give it a bit more room to run, and if we are in luck and the pound does reverse, you will see nice gains, because it will almost certainly turn down the way I'm showing you here, and it will head towards 156 and possibly a lot lower. If the B ended here, if the B ended here, that will be 1 2 3 4 5, and it should not go above that, and we will see this line continuing to hold the market down, and it will start breaking under 157.67. That will turn into the top. That will be probably a 1 2 around here. Will go down in the third wave. So this is also a good opportunity to examine from close. Okay, that's the pound Japanese yen. Now I'm going to try to tie in what I see with the yen and what I see with the Nikkei. Now I am really convinced that the Nikkei is going to turn down now. I'm convinced there are certain markets in this video that I'm really convinced. I if you like, very high confidence. I'm thinking about the Singapore market, and you will see when, unfortunately, it is the last video in this chart. It's the last chart in this long video. But the Singaporean market is just ready to drop like a stone, and I think that the Chinese market is continuing to send us very strong message. Very strong message. The bear is alive and well, and my wave count is working very well. And I think that now the Nikkei has reached a point where we can start talking about a possible sharp reversal in the Nikkei, and that's not going to happen on its own. You know, where I mentioned the DAX, the CAC 40. I think most stock markets are going now to reverse and start falling. This rally that we have seen was just a bounce in a big corrective pattern going down. So why do I have to mention all that when we look at the chart of the pound yen? Because if you remember, 2 weeks ago, I put forward the idea that the yen will strengthen. The yen will strengthen, and we will see the pound yen, the euro yen falling sharply, while stock markets will also fall. And then we will see later on the yen falling sharply and stock markets rebounding sharply. And I think that we could be coming very close to that point. Now all these, in the case of the pound yen, is hinging on the pound yen not rising substantially above my orange line here, and definitely staying away from this. We don't want to see it climbing and closing on a daily basis above this line. That will how can I say that will create a problem here. We will have to review the entire wave count here. This should not happen. Okay, so I said enough here, but let's go now and see. That's the daily scale, and let's go and see the hourly. I have modified it slightly. Now that's the hourly, and that is 1, 2, 3, 4, 5. I'm taking this as a fifth. Not ideal. The fifth could have ended here actually in a failure. My point is that I start counting the correction. I mean, that's first leg of the correction, and I'm taking all of that as A, and then that's an A, B, C. B, yes, and going up as a C. The way it is presented here doesn't look finished. No, doesn't look finished. I think that it'll take a break of 152. I mean, a dive back in here to possibly call it a day here, and we'll see this one diving back. So no recommendation at this point in time. Watch it carefully. We are not very far from the extreme level going higher. That's already, I mean, a firm close above 154, starting to build up a base here. That'll be menacing. And if the Nikkei holds ground and start going up, in the stock market, that's also not good. So these are two things that you can double check, one across the other. But for now, no recommendation. Certainly, situation will become super interesting on the break of 152. The Nikkei takes a dive 3-5%, and this one breaks through 149, 148. Go for it. Go for it, and I'm going to be with you because we are going to follow it closely, and the Nikkei is going to take a dive, a serious dive, and this one will just crack. So I think we are going into some increased volatility in the coming weeks. That will be really exciting. That's the euro yen. Okay, that's the daily, and I've already mentioned to you many times that I like this pattern here because I think it presents clean case of 5 legs up. As clean as you can make it. In the circumstances here, in the forex, that's the daily going back to May last year, giving us 1, 2, 3, 4, 1, 2, 3, 4, 5 complete. So all of this is a rally that went on for almost 10 months, 11 months, and this correction is not anywhere near enough. Not anywhere near. Certainly not this. This is forget it. This is not a correction. It's just one element. So I'm pretty confident when I tell you that I think this is not enough as a correction. Very confident. In fact, the one thing that I could be wrong is that if it continues higher, I have mislabeled this. You see, that's why I would fall. I would fall. If it continues higher, then the correction didn't relate to all of that. So I was wrong. So that's why I said if it starts establishing a base above the extreme high here and start continuing to go up, then I have to revise what you see here. That will not hold. But if this one holds, and for now I think there is excellent chance that this is the right wave count, this is going to come down. This is going to come down. Yes. Let's have a look at the 60 minutes. I have a short position in this one. Currently it's going against me. I also have a short position in the pound yen. It's going against me not by a huge amount because it is a small position, but I have it and I haven't sort of given up on it, and I am looking forward to add quickly when it starts deteriorating, because this move will be lightning fast. This C, if we get this one and it begins to crack exactly as I have in mind, it's going to be a really fast move. So that is the 240-minute scale going back to the 14th of April. That's an A. Quite a few options here. That's an ABC. That could be an X with an A, B, C, D, E. That's an X. That's another ABC. Okay, that's one way. Another way of taking it, that you take all of that as an A. B ended here or here, and that gives you another C. Another push up, quite possible within the wave count here. A crack back towards 130, and you see my support line here, rising support line, breaking through the horizontal support that you see also here. Very, very important. Right here, 130. Do you see that? Very, very important. So breaking through that, breaking through the rising support line, beginning to dive. That's already very, very interesting situation here. And a break of 128 will only add to the momentum, send it to 155 and potentially a lot lower. So take a good look at this one. This market could move very fast. Okay, let's continue with gold. And gold is making some noises here on the daily scale and on the 60 minutes that it wants to go higher. And I think that for now, that is the most probable scenario. It wants to go higher. I'm not sure how far, but if we are dealing with a 1, 2, 3, 4, we have another $60 or $70 up. I don't think it's going to climb above the overhead resistance that we have here. 1350 could actually stop this rally. Yes, 1350. That's gold daily scale priced in US dollars. Going back here on the scale to the 21st of January this year. Bottom scale just under 1,200. Top scale 1,700. And you see this descending line. That's the 50 moving average. This is a very powerful combination. Not sure if it's going to make a lot of headway here. It is still in the process of trying to build just the first element in a possible correction, struggling correction here. This is 1, 2. That's the. Let me put it this way. The 1, 2 idea, the 1, 2, 3, 4 is the optimistic side of things in case of gold. Okay, so that's 1, 2, 3, 4, and the short. And the short will probably, as I said, go to 1360, 1370 or so, and that will give you 5 waves. And this is a big deal. If I'm right here, that's a big deal, because then it will go into a lull here for several weeks before it continues higher. I do not think it will continue high in a major bull market, but it will continue higher as part of the very big corrective pattern that is operating here. As I said, this is the optimistic side of things. The pessimistic side of things concerning gold, of course, will take this as an AB and giving it another chance of just popping its head above 1300s here, and that will be turning into a 1, 2, 3, 4, 5 and a dive. If that happens, if you see something like that, just a blip and then a dive under 1260, it is probably almost certainly going back to 1180. And if it's ready to continue lower, who knows where is the stop, where it's going to stop. But I think it's quite possible it's going to do this for quite some time, if this is the scenario that is playing out. But at this point in time, I don't know how to present to you the odds, because in the case of gold, I do like the bullish scenario. I do like the 1, 2, 3, 4. But when I look at silver, I'm just held back. I'm held back by the chart of silver that looks outright bearish. Do you see? This is the daily scale, and it's not even inconceivable to try to treat this as a 1, 2, and that's 3, and this is actually part of a force wave that still relates to the previous descent. This is not the case in gold. In gold, we can't do that. In my opinion, in gold, it's not feasible. It's just not on in terms of the time scale. But with this one, it's just about possible. But even so, if you don't do that, just look what it's been doing. While gold has been holding on to some constructive pattern, this crack here, just going nowhere. This is very bearish. Very bearish. All I can make out of it is a short advice. Stay away from this market. Okay, that's platinum. That's the weekly scale of platinum. Now, I don't know how many of you are going to trade platinum. The reason why I included it in this video is that platinum is a major industrial commodity, yes, in cars, it's also in jewelry, to some extent very appreciated in Asia, but I think it is closely tied to the car industry, and I think that the markets in Asia, especially in China, are slowing down. And that is having an impact on the market here. My wave count that you see here is not high confidence, but I decided to include it because the breakdown here is definitely something we should take note of. It has managed to do what copper didn't do. Copper hasn't managed to do that. Palladium has did not manage to do that. And what I'm talking about is cracking the level here. And in the Russian index didn't do that. This is a marked weakness because it's a weekly scale, and it's actually broke down a support line that held for almost 3.5 years. This is serious. This is serious. It broke through that one. That already occurred quite some time ago. But recently it actually broke under this one. Do you see clearly? Right here. Yes, at 1,430 or so. And it has not managed to recover above. So I think that the price action so far is supporting the tentative wave count that I'm presenting here, with this being an A, that's B, we're going down in a C with an A, B, C, D, E. Okay, that's the weekly going back to July 2002. Bottom scale 400, top scale here 2,200, and the idea is that we go down. We go down in a deflationary smash. That's as much as I can make out of it at this point. And what's happening here is an A, B, C, D, E. And let's take this one step at a time. And as I said, it's not a high confidence reading. There are quite a few options that you can consider here. But I would suggest one of them that merits your attention is a 1, 2, 3, 4, 5. That's an ABC. Okay. That will play as a 1, 2. We have another 1, 2 here. If I go to look at it from real close, you have 1, A, B, 1, 2, 3, 4, 5. Okay, so yes, there could be further push here, and ideally it should stay under 1,450, and that will play out as an excellent ABC. So a break through this level is a sell for platinum. Okay, a break through this level. Let's have a look at the details here. Here are, this is a classic ABC. Yes, you remember we have seen it in the pound, Singapore dollar, pound, Canadian dollar. This is exactly the same. No, exactly the same. Look, AB, 1, 2, 1, 2, 3, 4, 3, 4. Slight push here, turn down, break under this level, the orange line, sell short, put your stop here, wherever the top happens to be. Yeah, right here, suppose it breaks through, you sell. Right here, you sell, you put your stop here, it breaks, it goes down to the floor. Of course, you move your stop to break even. If we get that waterfall collapse, you are in luck. We are in a 1, 2, 1, 2 situation. You're going to see huge profits, absolutely waterfall collapse here. Take a look again at the weekly, just to see the scale of what could be coming here. You see the massive support here, and you see the break. And as I said, it hasn't managed to climb above. So naturally, any any attempt that fails here and this market being pushed down and breaking again 1,300 is not going to be for just going down for another 10 ticks, for $10. It's going to go and go and go. This is the weekly scale. It breaks 1,300 on a weekly scale. It's going for hundreds of dollars down. This could be a mega trade. You got to be patient here with this one. Okay, that's the 30-year T-bond interest rates. That's the daily. My wave count is intact. Yes, some small setback here, but the wave count is intact. I'm not abandoning it at this point in time. I will abandon it if it cracks, if it gives me a big red candlestick right here. If it cracks through, cracks through my orange line here, it breaks down, then I will be forced by Mr. Market to abandon that. Right now, this is still looking okay. So that means that as long as it stays above 3.48 right here, the chance of a fourth wave is very good, and that implies higher rates down the road. Not in 3 months, but maybe in 3 weeks, in 2 weeks. Okay, that's the 10-year note, daily scale, 1, 2, 3, 4, still intact. Still intact. Let's keep the wave count as long as it works. There's no reason to abandon it. Okay, here is the USD bond. That's the September contract, daily scale, wave count intact despite the rebound. That's 1, 2, 1, 2, 3, 4, 3. Let's have a look at the wave count from real close, and it could be actually in the process of delivering the last blip here on the upside, with this being A, B, C, D, A, B, C tiny, giving you the E. Yes, further push up, quite possible to take the stops from here, even go slightly higher. On a break of 132.12, sell. Sell, 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 sell. It'll go down to 132.06, most likely much lower than that. It climbs above my orange line here, which comes at 136.28. No interest in selling short, and no interest in staying short. A daily close above 136.28 is a signal for you to just get out of your shorts, or just stay on the sidelines if you have intention to sell short. I'll continue now with the stock markets, and I'll first discuss the Dow Jones Industrial Average. That's the weekly scale going back to March last year, and I think that we are done. That's it. I think it is going to reverse. It's going to reverse. We're going down to 14,500. That's an A, that's a B. We'll look at the details in a sec, and we're going down for the C. If I'm right, this could take easily one month, maybe 6 weeks. The implication is that we are basically building a base that will carry the Dow a lot higher. This is as it looks here, and if we get this seed, the implication is that the Dow is still in a major bull trend. There is no, if you like, reason to expect a sudden meltdown or something. This is fairly bullish what we see here, but I don't, as I said many times, I don't think that the market is ready to soar about this level. To go up, trade around, take the stops, fine, this is still okay, and it has not punctured, if you like, my idea that that could turn into an ABC. This is still, in my opinion, a viable situation of an ABC. So let's have a look at the 60 minutes. And of course it requires readjusting here the wave count. Some of you might not like what I say, might think that we have to insist and take this as a 1, 2, 3, 4, 5 as one of the options that I discussed recently. However, even if it is a 1, 2, 3, 4, 5, we're going for a correction to the last 3 weeks rally. but I don't think this is the case. I think it is going to go a lot lower. I do think that this is an ABC. And why do I say that? Not because I fancy, but because I think that most other markets that are now going to correct do appear to be in a phase of a correction that would last much longer than what you see here. And I lean heavily on the European markets, where I think we have near perfect pattern. So I won't dwell too much on that. That was one of the choices, as you can see, is to take 1, 2, 3, 4, 5. That's going for a correction, or you treat all of that as a C, yeah, with a different subdivision, of course, and that will be taken as an ABC market going down. That's the S&P 500 daily scale, and also here it did exceed the top, took the stops. The market is in complete euphoric state of mind, no question. A rally that was almost unstoppable here for 3 weeks, but the time has come for a correction, if not a sales slump actually, towards 1540, potentially lower, to retest the 200 moving average. That's the 200, and to retest the major support that we have here. Okay, so this is what I think is the most likely scenario. I said in the introduction to this video I wouldn't sell this market short, because the US markets in the last 3-4 days have been going up, while the Chinese market has been going down. The Singaporean market went nowhere. The CAC40 of France, the DAX of Germany, they follow at their own pace. Yes, they follow the US markets, but they haven't scored like spectacular gains. But nevertheless, I think you want to go for the weakest markets first when you consider selling short. That's the way I view things. So while we can see marginally higher highs here, I would definitely not buy, and I would urge you to put a firm stop under 1670, even this 1680. I wouldn't stay long, especially if you have profits from anywhere around here. I wouldn't stay long. The risk is just immense. Just forget it. I'm telling you what I would do with my own money. I'm actually short some stock markets, and I'm looking for the market to reverse. You could accuse me of bias reading, but that's what I do with my money, and I'm just sharing with you my thoughts. This is the S&P 100. That's the weekly scale. I've mentioned in previous videos that we are potentially looking at a triangle formation here. This is still looking like the most likely scenario, with this being the weekly going back into May 2010. That's 1, 2, 1, 2, 3, and the fact that it shot above the previous high is nothing. Is nothing in terms of the pattern here. This is perfectly acceptable, and let's have a look. And my idea, it just tells you that it's very strong, and it's maybe opening the gate for considering that this will not be exceeded, meaning it's not going to come down and break that, because the triangle might be tilted upwards. Okay, you're going to get this as a triangle and then up, rather than this. Okay, triangle looking down and then the shot up. This occurs when you have a very strong market. The trend is very strong. This occurs when the selling force is pretty considerable and the market is taking its time to absorb all the selling before it goes up. So I think we are clearly in the situation, if we end up having an ABCDE here, we are in this kind of situation. Okay, so I favor now standing aside if you are long, not selling short this market. As I said many times, I would sell other markets short. Okay, that's the Nasdaq. That's the weekly scale of the Nasdaq 100 cash, and I'll just go quickly here to review the long term, going back to 1991. Bottom scale 0, and top scale 5,000. We have seen the med top here in 2000 and the crash, and I take all of that as an ABC behind us, and we're going up. We're going up, and this will create a substantial bull market here. We already seen quite a substantial move from the bottom here, and it is taken as a 1 2 3 4 5 1 2, and that is the ultimate worst scenario that I can picture to myself concerning this one. It'll drop down to 2,400, but the performance recently has been really remarkable, and it is opening the gate for several options here, and I do not have at this point in time a favorite wave count. Sorry, that's the way I view things here. I just don't have a favorite wave count here. I'll share with you my thoughts. That's the daily. That's May last year. We came up from here, what could be considered the bottom of a second wave. We went up with a 1 2 3 4 5 1 2. Fine. We could be in a 1 2 1 2 situation. This is the ultra bullish alternative. Yes, that means the market after a very brief correction here will just continue to soar. I don't think this is likely. On the background of other markets collapsing in Europe, in Asia, it's unlikely. I think the investor sentiments now has turned, and you can see the gap opening here. We had terrible figures from Intel, so I think that's now this reversed the trend. Just look at the MACD. This huge divergence here. This one topped well above the previous high. The MACD hasn't managed to do that. In fact, the MACD turned down on the daily. So I think we are going down now. The question is whether this is a 1 2 3 4 5 or whether this is a 1 2 1 2. I don't know. But if this is a 1 2 3 4 5, we're going down for quite some time, because it will correct all of this rally. 1 2 3 4 5 6 7 8 months. 8 months rally. At least 2-3 months of a correction that will go around here. So that's the Nasdaq. Let's have a look at the 60 minutes. So I had this, if you remember, as a 1 2 3 4 5 AB, and that's the top. If it is not the top, it's going to give us this. It's going to recover and shoot above 3,100, but I wouldn't go along with it. The risk is far too high. Okay, I'll cover it closely, and we will see the developments. Okay, that's the CAC 40 of France. This market is going down. This market is ready, in my opinion, or very near ready to break down. It hasn't managed such a spectacular rally like in the US. If you remember, you just saw the Nasdaq. The Nasdaq was well above the corresponding high here. The Dow, the S&P 500, 100, they all managed to either come very close or exceed this level. You can see that CAC 40 has not managed to do that, although yes, managed to recover the 50 moving average, got support from the 200, got support from solid level here 3,600, but all of this is not going to stop it now from reversing and breaking down. This is my best assessment. I'm short this market. It went against me a bit. I'm still in. Not worried. Not worried for now. This is not a game of being stubborn. It's a game of just sticking to your opinion with a certain stop loss in mind. And when things don't work, I just throw in the towel. If you don't throw in the towel in time, you might not even stay on stage. You know, it's that simple. That's 60 minutes, and that's our A. That's B. 1 2 3 4 1 2 3 4. Yes, Monday morning with a blip up, and then start looking down. If you are not convinced about selling short this one, I would suggest give it a serious thought on a break of this level, which comes at let's see, 38.25 or so. 38.25, break of 3800 is a good signal that this one is finished with the upside. 3600 will become the next target. Okay, that's the FTSE. Very interesting situation here. Very intriguing actually, and I see it actually following in the footsteps of the Dow, in general, the Dow Transportation Average. If you remember, we had that massive triangle. I discussed it yesterday in detail. We had this massive triangle and the shot, and I also discussed the time scale and why I think the market there is not ready to continue straight up. And the FTSE is basically really reflecting the same pattern. This is the cash, the weekly scale. Now, I would like to say that for the European markets and for the European markets and for the US markets, I think that the bull in the US, certainly the bull is alive and well. In Europe, the bull is making baby steps, and it is not yet confirmed. And in the case of the FTSE here, I still like the idea. This is the weekly scale going back to July 88. I still like the idea that we had a triangle terminating here. It's something that you should be familiar with by now. Complex pattern, triangle ended here. We had the first short up. That's one. But as I said, I don't think the second is done. So I think what happened recently in the last 4 weeks here with this straight jump is that this is part of the correction second wave. This is really my best assessment for this one. And I think it will come down to complete the pattern. And then, if we don't break the origin, yes, of this first short up that comes at 56.05 right here, then we are okay. We are okay with the third wave going up. The FTSE is going to exceed 7,000, start running up, basically reflecting what I think will happen in the US. Very, very strong move. So this is for now still on track. No reason to abandon that. But I think the market is coming close to resistance here, and it will come down correcting. Let's have a look at the details that are visible here on the 60 minutes of the FTSE. That's the futures contract. Okay, the futures contract, continuous contract. It gives us that's an A, that's a B. 1, 2, 3, 4, 5 looks to me the most likely wave count. The 1, 2 is taking it to extreme. That's the extreme bearish case, and I don't think it's very likely. At this point in time, I favor taking all of that as an A. That's as a B composed of an ABC, and FTSE beginning to crack, breaking down towards the floor of 6,000 and slightly lower than that before coming back strongly. Here's the DAX, and that's the weekly scale of the DAX. Let's go and see the triangle, the entire thing here. It will take a sec to come through. The DAX on the weekly, and it carries on and on and on and on. What we really want to focus on is this, the pattern from here, and we have this as an A, B, C, D, and I suggested that the E ended here, a bit twisted kind of E, but that's the best I could make out of it. And I think that the fact that it went and exceeded the previous top is very good, is very bullish. It is in a way confirming signal that the bull is real. For now, we have no reason, technical reason to abandon or to doubt that. So this is the best wave count that I have for it. That's a 1, 2. Okay, you are with me with the scale here. We're with a weekly on the screen. It's going back to 2008 January. Bottom scale here 3,500, top is 8,500. Okay, so we are running up from the end of the triangle E, and we have a 1, 2, 3, 4, 5. Okay, if I'm right with this one, we probably finished a big first wave up, and this is no way and nowhere near enough of a correction as a second wave. I'm sure you can see that. So now let's go to the daily. Wait, before I do that, do you see, I think that we are going to break down now, and a break that could look like a collapse going back towards 7,000 will still be okay in terms of the proportion here. So a massive correction back to the other side of the rising channel here in orange is still okay. That'll be pretty big slump. Take a look. That is what I have in mind. That's the daily. That's an A. That's an ABC. I think the market is getting ready for the slump. Yes, that's the way I see it. I'm short the DAX. I'm short the DAX, and it went against me slightly, but I'm still there. I'm still there because I'm convinced that it's going to reverse and slump down. So that's the 60 minutes. That's an A. That's an AB. 1, 2, 3, 4. Another push up, or maybe not. We might have a missing wave because it does look like it needs another push up. Do you see? That's 1, 2, 3, 4, 5. Go down. I sold it around here. I sold it around here, and it went slightly against me, but it's okay. In fact, I would be more than happy to double my position on a break of this level. And you should also consider, in my opinion, selling short on a break of this level, because then we are done with the ABC. This level, if you like to know, it's around 81.20 or so. Okay, 81.20 on the continuous contract. Okay, that's the Nikkei, and this is super interesting. Absolutely, this is really interesting. Together with the Singaporean market and also the Chinese market, this is super interesting. This is the Nikkei weekly scale. Okay, the cash. That's November 2009. Bottom scale 8,000, top 16, just a double. And we have seen an impulse wave that for now we consider as wave 1. And I said to you all along, I don't think that this is the end of the corrections. Looks to me too brief on the time scale, and I think we should see a little bit more of a correction. But look what the MACD is saying. It went so high, the MACD. No, there is no support from the MACD. So when I go to the daily, the MACD turned down. Look, the MACD turned down. And what is really intriguing, as far as I'm concerned, this is a picture-perfect situation here of an ABC correction. And this is an A, could be also 1 if we go into a huge doom and gloom, but I don't think it's the case in terms of in the case of Japan. That's an A, and then we have an AB, a short C up, that's B, and look for the C down. If I'm correct, that's going to be a mega sell here now. Mega sell, absolutely mega sell. Let's have a look at the 60 minutes. This is developing. That's A, that's an A, that's a B. Look at my precise labelings here. A, B, C, D, E. Then 1, 2, 1, 2, 3, 4, 3, 4, 5. Look how it slumped on the close. So I would say that if you are interested, take a look at this. 14,000. 14,000. Any further drop, especially if it becomes really impulsive, like 3-4%, we get a 3 or 4% day on Monday, Tuesday. Forget it. That's it. It's on its way. It's on its way to crack towards 12,500, and it might not wait for anyone. Might go into a pretty sharp drop because the C often is more violent than the A. So that will occur when this will occur. We will also see the yen strengthening. Okay, I hope that this idea already is well understood. Let's jump here to the Chinese market. That's the weekly scale of the Chinese market, and going back into July 2006. That's an A, that's a B. We're going down in a big C, of which we have seen 1, 2, 3, 4, 5 giving us first leg down. We had the second wave. This market is just delivering the right thing in the right place at the right time, so there is no need to doubt anything at this point in time. You have a certain idea and you have to go along with it, and as long as you get all the right signals, there is absolutely no reason whatsoever to abandon it. And here we have everything pointing. Sorry, I have to set up this. Won't go into trouble here, but that's it. Okay, so here we go. Just look at that. I'm really proud of my ABC. You've been following this market. If you have been following this market, then you know for sure that I had this ABC and I said to you it will come down, and if it comes down to this level, this is a sure bet. This is an excellent bet. We are in the right wave count here. This is likely a 3, 4, whatever. This market is going down. Now the way it came down, in fact, it's I'm beginning to wonder if we are not in a 1-2-1-2 situation. Yes, if we are in a 1-2-1-2 situation, and what's going to happen Monday, Tuesday? It's going to crack. It's going to break this right here. It's not going to stop. It's going to break like that. And that maybe is going to pull the rest of the world into a panic swing from euphoric, bullish state of mind into doom and gloom, just look down. That's it. This is the magnet. I've already mentioned this so many times. This is the big magnet. And this behavior here is perfect. Perfect price action to fit my 1, 2, 3, 4th wave could still be ongoing. Or as I said, 1, 2, 1, 2. Just look down. Look down for a long time. So that's great. Great bear developing there. Now, this is not the least important chart in this video. I can tell you this. When you will see what I have to show you, I hope I managed to convince you on this one. This one is heading for a crash. An absolute smash. This is the STI of Singapore weekly scale, October 2002. Bottom scale, well under 1,500, 1,250 or so. And top scale is 4,000. Now, tiny Singapore is going to get it on the chin now. If my wave count is correct here, then the MACD says I'm probably on the right track. I have my A, I have my B, and we have just seen the first leg down of this major C. And why do I say that the MACD is probably supporting me? Because I was really astonished when I saw this. I've got to tell you, I was really taken aback by this. Look carefully. Do you see this? Do you see this? Where the market went in the last 4 weeks? The market went up. The market tried to correct. But when where the MACD went, the MACD went down. Look. This is extremely powerful signal that the rally that you see here is a fake rally, meaning it doesn't have a future, doesn't stand a chance of continuing higher. This is the best assessment that I have for it, and this is very high confidence reading. It's just that's it. It's a high confidence reading. This market is waiting for a smash. It's just around the corner. This is the daily scale now. That's the 50 moving average. That's the 200. It is just holding on to support here at the 200, but I don't see it holding for long. I think if the Chinese market continues down early next week, this one is going to either gap down the 200 or it's just going to crash through the 200 and down we go. Once it breaks towards the area that you see here, yes, 3150, there's nothing left in my opinion. It continue lower towards 3050 and potentially a lot lower in the third wave. So this is looking really on target to deliver a lot lower lows. Shouldn't be surprising when we see the abysmal performance of the Chinese market. Why should we be surprised? This is just following in the footsteps of the major player in that region of the world. Okay, so that's all for this video. Hope you find it useful. Wishing you successful trading. Bye now.